Am început?
Da, gata.
Morning, everyone. Welcome to today's webinar. It's a pleasure to be today here with you. My name is Madalina Sinar, and I'm head of Bucharest office within BRCC. It is my pleasure to welcome our newest member within the Chamber, Invoice Cash, and to organize together a joint webinar. The theme for today's webinar is factoring solution and data analytics in export finance. Today we will hear more about what is data analytics, what is factoring, and most common challenges you might face in import-export markets. Before I go ahead and introduce our speakers today, I would like to let you know that this webinar is 1 hour. We are also recording it, and we are live streaming via Facebook. The webinar has a presentation, and the Q&A will be at the end of the session. If you have any questions in the meantime, we do encourage you to ask as many questions as you like and to use the chat box below. Without further ado, I would like to introduce you Bogdan Patriniche, founder and CEO of Invoice Cash, a senior international banker and financial consultant with a key interest in mathematics, technology, and finance. Bogdan will present today alongside Coralina Zotic, senior data scientist at Invoice Cash. Bogdan, without further ado, you have the floor. Thank you.
Thank you very much. Let me introduce also our colleague Roxana Chiriță, who is a key member of the team, and she will also, co-participate alongside Coralie and myself. Thank you in the audience for participating. If there are any questions, please feel free to interrupt us, and we'll try to answer any questions as they come from the floor. I will give the floor to Coralia, who will start introducing Credit Sky. Credit Sky is a Romanian company focused on artificial intelligence data analytics. We have built up a fintech pillar, and we're in the process of developing 3 other pillars: climate tech, medtech, and social service tech. The only one that is developed as of today is the fintech pillar, and I will let Coralia introduce you the fintech side, as she is the main architect behind the development of this product.
So I will start with telling you.
Coralia, you're on mute.
Now it's better. I will start by sharing with you that we are able to predict for all companies in Romania, which is their probability to default over the next 2 years. We are doing this using very new algorithms of machine learning. We are doing this using machine learning. And one of the most important and last appearance in the domain of machine learning predictive analytics. By using these types of algorithms, we can predict with accuracy of 99%, which is the probability that each and every company in Romania will default over the next 2 years, over the next 3 or 4 years. We have distinct models which is doing this kind of things. We also are able to predict which are your customers which will churn over a specific period of time. And because we are speaking about data analytics, the most important part of data analytics is, as you can imagine, the data. If we have data, we can do almost everything. We can create and we can analyze almost everything. We also have this single kind of modules that can segment your competition, your potential clients, your providers, We can understand which are the best customers to which you can go. We also can compare your company with your competitors. We can select and segment your competitors and can include you in the best segment where according to your financial indicators are located. For being more specific, we can get to a presentation to understand some of the case studies we analyzed. For example, we have done a specific analytics on the agriculture domain, where we analyzed a list of customers, of specific customers that are active in the agriculture domain in Romania. Our client was a bank which wanted to understand better which are their customers and how can they get the customer, which is the best customer for them to do business with. Our platform provide a very useful insight regarding all that customer, and we maximize also the profit of the respective customer of ours. So which was the first step we've done with using this platform of ours? We managed to select the specific NACE code where we do these analytics, and we segmented the customers in 4 distinct groups. The customers with low probability to default over the next years, the customers with mid probability to default over next year, and the customers with high probability to default over the next 2 years. The medium segment, we segmented in, we split it in 2 parts, mid, low, and mid, high probability to default. Also, by doing this first step for segmentation of the customer base, our client can understand and go directly to the best customers with low probability to default. By doing this, they can for sure increase their profit and eliminate the possible risks. The second step we followed was to calculate ratios on asset to debt for understanding and explaining to our client which are the customer that our bank can go and extend also the loan in volume and also as a period of time, because if we know which are the most the best clients with low probability to default over the next 2 years and over the next 4 years, then the bank has the ability to go and extend the loan from 2 to 4 years. Another important thing was that knowing the asset to debt ratio, and if the asset to debt ratio is above 1, then for our client there is sufficient place to increase their debt, so increase their profitability on the client. By generating this list of clients with distinct probabilities to default, we also can go to the step 3 and allocate this customer on specific region, specific counties. The company has the ability to optimally allocate the sales force by region and to maximize their lending. If there are some questions till now. Okay. Going further to our analytics, We managed to segment the population in two distinct segments. The companies, we can see here that the companies with low probabilities to default, 36% of them are the companies that can that have a total asset to debt ratio higher than 1. So these are companies where we can put supplementary debt, which we calculated, and goes to this amount of money they can put supplementary. On the second segment of customers, the customers with a mid probability to default, there are 25% of these companies that can, where the bank can add supplementary debt. So we can see that going from a low segment to a high segment, there is less place to add supplementary debt. After doing all this kind of analytics, we also can see the companies, which in this case was a predefined list we received from our client, but for any domain for every NACE code in Romania, we can see exactly which are the companies with high probability to default, medium and low probability to default, and how they are split and distributed over the country. For example, on this sample, we can see that there is a really important issue in this location, because 50% of the companies have a very high probability to default. But if we check the other countries, we can see that, for example, in Tulcea or in Constanța, there are companies with less probability to default. So we have only 30% companies that will default over the next 2 years in Constanța. So Constanța may be a good county where you can develop your business. Going further, we explained to our client that considering the companies with a asset to debt ratio higher than 1, so companies where we can add supplementary debt, split it in all the 4 categories, we can see that we have a number of 171 companies with low probability to default. We can see which is the total debt on these companies, how much supplementary debt we can add on these companies. And going further, we can see the cost and benefit on doing all these kind of things. Practically, using our application and our data analytics, we can see at each moment on each NACE code which are the most important companies in terms of financial indicators, which will default the next year and over a specific period of time. After that, we can, for each of the companies included in our analytics, we can determine all their financial indicators and the way they are positioned in their segment. I'm referring to competitors, so we can see for each company how it is positioned against their competition, if she's acting as a good competitor or not. On all these directions regarding competitors and also regarding potential customers and potential providers, we can use our artificial intelligence algorithm in terms of unsupervised machine learning. So we can do different kind of segmentations. For example, in this case, we managed to segment the target population into a specific segments. This was the best number of segments. the direction on which we did this segmentation was probability to default over the next 2 years, advance payments, and lifetime on the market. So we can do segmentation on different kind of population on any direction we want, and on how many direction we want. We used for this example only 3 direction because it is much easier to visualize the information. By doing this segmentation and generating the 2 clusters, the 2 segments of population, we could segment also the target list in 2 categories. The one included companies included in cluster 1 are companies with low probability to default, with a high lifetime on the market. As an average, we can see on this cluster of companies that they increased the number of employees in 2020 compared to 2019. And also we can see for this segment that they are having low total debt in average in 2020. The other cluster is containing companies with high probability to default and a low lifetime on the market. This cluster in average increased also the number of employees in 2020 compared to 2019, but with a lower rate than the companies included in first clusters. And also we can see that here we are having companies with a very high rate of debt on 2020. By doing this cluster on a population where we don't have any idea of how they are acting, what are they doing, we can find patterns. And if we find these kind of patterns, then we can better approach these customers. Or if we found, for example, patterns in our competition, and we classify our competition in bad competition and less bad and better competition, we can compare and us as a company with our better competition and try to get there by adapting our financial indicators, our decision on the market to companies that are better than we are. And this is really simple. The algorithm and the artificial intelligence is doing this for you. You only need to have data and work with them. For sure, in this cluster, we can have also the name of each company analyzed, and also we can see how the companies are distributed on a country level in terms of this segment. So in segment 1, we have the best customers, and we can see that also in Constanța, we have less good customers, but for example, there are also counties where we have many customers that are included in the first segment, so in the best segment.
On the churn prediction story, basically the churn prediction can be useful for banks that are interested in finding out which are their clients that will leave the bank for a variety of reasons. And what we argue here on, we have a client is a Romanian bank that was interested in finding which of their retail clients will be leaving it, and doing nothing, basically the bank is losing approximately 13,000 euros. This is this is an assumption to just show to the respective bank. The amounts are much bigger in reality, but we showed them on a sample of a few thousand customers, as making certain assumption about the amount of clients that will leave the bank, the amount of revenue that these retail clients are generating to the bank. This is the level of the loss that they will be incurred if they do nothing. If they do a blind marketing campaign, they will be losing less money, but they will be targeting a much broader universe of customers, and it will be more expensive for them to do this blind campaign. If we do it with us using our artificial intelligence algorithm, we would be able to, just at a 10% success rate, to generate a positive cash flow to that respective bank. This type of churn forecast algorithms are extraordinarily valuable, not only for banks, but also for insurers, for the likes of Netflix, or for the likes of any other sort of fast-moving consumer goods company that has customers, that has a loyalty scheme, and within that loyalty scheme, they can protect their existing customer base. If you are a health club or a gym, or just the Romanian opera selling, annual subscriptions to your potential visitors, a churn forecast algorithm is a very useful tool to keep and maintain this universe of clients. And that's basically, in a nutshell, what this presentation is all about. It could also be used by the British Chamber of Commerce if they think that some of their members are going to depart, and we can analyze that. And those that will probably, have intentions to churn would be able to remain and stay loyal. So that's basically something that can be used by any, not only by banks or insurers, but also by any bank. From a magazine that has subscribers, to a gym club that has also subscribers, to a football club that is selling annual tickets, season tickets. Anyone that has a loyalty scheme could be a user of this. Are there any questions at this stage?
I see we have a question in the chat, and it's addressed to Coralia.
Okay, that's basically, okay, so.
Yes, I saw.
Let's
I
close
asked the question.
Let's go.
What type of data did you use to find out the segmentation? For building our models, we used especially public data, data from the Ministry of Finance, from the National Institute of Statistics, but also our data that we are generating inside. So we are using also for segmentation data that we are building inside, data that are generated by different algorithms, as for example, the probability to default.
So basically, it's done on public data on the fintech side, and also on predictors that we have generated internally. The segmentation is very valuable for building a very efficient sales and marketing machine, because rather than having a very broad and blind marketing campaign, you can segment it based on probability to default. You can segment it based on size, based on volumes, based on your counterparties, and it can be much more efficient and better tailored. So it's basically in using data wisely and smartly. And
we have also another question. For churning, the client needs to provide the data, or you use the public ones, and which the question is compliant with another one. What kind of data have the potential customer to provide in order to have this kind of analysis? indeed, for the churn modeling, the client have to provide us the data. So we cannot do this churning analytics on customers because we don't know which are your customers. So we need the data from you. So you have to provide the data with the historical data, and we use our algorithm to generate the probability to churn. For companies, for evaluating the probability to default for a company is much simpler. You don't have to provide us anything because we have all this kind of information from public resources.
Going back to churn, it's very specific to the business and to the industry. So if I take two examples on, if you are a bank and you, on one hand, you are, say, BT, the largest bank in the Romanian banking system, or you are the other one at the other extreme, generating zero to market share, say Marfin Bank, for the lack of a different example, then you have different type of customers, you have different type of products, you have a different universe of data. So it's very much client dependent, the whole churn process. And it's also the strategy that is behind churn is also very much client dependent. We didn't encounter problems in integrating our work with the data system of the client. That was another question. It's just that in certain institutions, the IT system is better organized and it's easier to collect the data, and in other companies, it's a bit more cumbersome. So it's again very idiosyncratic to the company that is a client. The other advantage is that it's not, the churn product is not constrained by Romania, because we can have similar, and we intend to have in the very near future, similar projects in other jurisdictions. Where what you have seen on the fintech side for the moment is only in Romania, because we have only the Romanian data. We are in the process of acquiring data from Poland, from Italy, from other Central and Eastern European countries, and we will create similar models for all these other markets. Other questions? Okay, so then we move to the factoring project. On the factoring side, we will try to show you, can we have the movie or the presentation? Let's go through the platform. Basically, the factoring product is it's developed by Invoice Cash. Invoice Cash is regulated by the Central Bank of Romania. We are authorized to do factoring, forfeiting, and discounting transactions. We're doing it online. The specificity of that is that it can be done online, and we don't take the risk of the seller, we take the risk of the debtor. Factoring as a product is as old as, I would say, humanity. Was developed in the Roman Empire, probably 300 years BC, which is before Christ, not before COVID. And it evolved through the years. Romania is a country within the European Union where factoring is less developed than in the European Union. On average, if you take factoring penetration as a ratio between the amount of factoring and the GDP of the country, Romania is around 25% of the European average. So the opportunity for factoring to grow is significant. If we want to reach the average of within the European Union, we need to grow by 3-4 times the market. Britain, on the other hand, when it was in the European Union, it was a market with approximately 175% share compared to the European Union average. So it was, alongside Italy, the most developed market in terms of factoring services within the European Union. Factoring is a product that helps, I'll let Coralia do the magic and show you the platform. Factoring is a product helping company get access to liquidity fast, easy, without all the complications that the bank will show you. And that's the demo. It's an old demo because you will see dates from 2019, but it's not exactly, the platform is a bit more developed today than what you see in here, but it was produced by the other founder in the company. It gives you an illustration of what can be done with the instrument. We have closed export transaction whereby a Romanian company exported into the UK, and we have taken the UK counterparty risk, which means that the Romanian exporter was free to export in the UK market without thinking or without bothering himself or herself with the credit worthiness of the British counterpart. We can also help British companies selling into Romania by providing them with factoring services without letting them bother too much with the credit worthiness of their Romanian company. So it's a product that really can help the import-export activities between Romania and Britain in a very simple, concrete, down-to-earth manner by mitigating counterparty risk, by providing the selling side with liquidity, by not stressing their respective balance sheet with additional and cumbersome banking rules, requirements, regulations, and covenants, by providing a single point of use, all online, and everything done at the end of, at a click of a button from your laptop, from your office, 24/7, 365 days a year. So in that respect, the product is really helping companies import, export, and trade. So it's a trade facilitation rule that can be used domestically for Romanian companies, but can be also used for import and export activities. So that's basically our product. We have started it more than a year ago. We have closed 50 plus transactions. We didn't have any credit issue. We have liquidity. We're happy to deploy it. And we would be more than interested in continuing. With the UK, we have closed approximately 11 transactions, whereby Romanian farmers export agriculture projects to the UK. And we would love to help the British exporters selling into Romania without, bothering or scratching their heads too much about the credit worthiness of their Romanian counterparts. In the meantime, we have developed also a blockchain transaction, which also is helping exporters and importers that are part of a value chain or a supply value chain. So we have developed, it's a proof of concept, a blockchain factoring transaction, whereby a farmer from Spain that is selling into a processor in the Netherlands that is selling into Romanian importers are all on the same blockchain, and we are able to fund the whole process. As I was speaking, you have seen all the steps that a seller as well as a buyer need to go through to have their documents validated and make themselves ready for a transaction. So as you can see, it's a few minutes. Once you get a bit more experience, it can even be reduced to, say, a minute or so. So that's basically where technology can support us. And obviously, all the credit analytics behind are done by Credit Sky, the sister company that Coralia has presented before, so that all these, smart data analytic algorithm can support the factoring opportunity. That's the story in a nutshell. So we would be delighted in helping as many Romanians export into the UK and as many UK companies export into Romania. That's the story in a nutshell. So as you can see, we're more or less done. And at the end of this whole exercise, you have heard the invoice cash story, and the demo is more or less close to an end, and the invoice get paid. So thank you very much. If you have any questions, delighted to answer them. Oh, 6 questions. Let's see.
Only the last two are not answered.
Are there any fiscal implications for UK-based companies willing to sell their receivables owned by Romanian counterparts? No, it's basically a very simple transaction where a UK company will sell an asset, will buy the asset at its face value, and I don't see any other, so we will, basically, we will see exactly if there is VAT, but the VAT is on the invoice and we buy the invoice with VAT. So it's post-VAT transaction. So I don't see any other fiscal implication that has not been covered by the commercial contract between the UK entity and the Romanian counterparts. And the second one is VAT included in the payment. Yes, it is. We're buying the invoice as is. So at full value. That includes the VAT. So it includes the VAT. Okay. The question is, by any chance, did you notice a tendency in the case of some of your clients from a specific country to use? The honest answer is as follows. So for the moment, we have done domestic transactions, so Romanian sellers, Romanian buyers, and we have looked only at Romanian exporters into the UK and Romanian exporters into Austria. So these were the international transactions that we did. So I don't have examples to compare, say, French clients or Italian clients if their behavior is different, or German clients or Dutch clients. So for the moment, the only trades that we have closed were that involved a Romanian exporter to a specific Western European market. The reasons behind the Romanian exporter doing this were threefold. One was they got a commercial advantage when they sold their services to the UK or to Austria because they proposed to their counterparty payment terms. So rather than asking for them to be paid spot, they offered them payment, which was something that the UK customers or the Austrian customers considered as an advantage. The second consideration was that it removed the counterparty risk because we have acquired the invoices from the Romanian exporter. And then thirdly, it also helped them be, in cash, more liquid rather than waiting to be paid, and also being exposed to FX risk, because as the maturity extends, some of them didn't have FX provisions to cover the eventual depreciation of the RON to the euro or of the RON to the pound. So all these considerations were an important element for them when they looked at this. Okay. How fast can the seller receive the money? It's basically on the spot. So the question is how fast the seller receives the money means as follows. When we have an English or an Austrian or a foreign client, the KYC, AML and PEP procedures, which are typical for banks, take a bit longer because we need, for instance, in the case of a UK company, we need to translate or to apostille, because Romania is a country that follows the Hague Convention of Apostille Documents. So basically, in the case of the UK client, they had to send us their articles of association, which are downloaded from the company's house in the UK, and then have this document apostilled at the Foreign Office. The UK Foreign Office works relatively fast, and there is also an urgency procedure which takes 24 hours, but in general, in 3 days, you can get your document apostilled. We got the document apostilled and we translated it, and it was fine. This is a one-in-a-lifetime process. So once you do it once, the second and the third transaction can be done instantaneous. So the seller, if the seller comes on board at 9:30 in the morning, and he or she uploads the invoices at 9:35, by the time the Brits arrive in their offices around 8:39 UK time and confirm the transaction, we can pay the Romanian client on the same day. So it's on the same day, with the exception of the first transaction, where the IML and the KYC process takes a bit longer. But from the second transaction onwards, is on the same day. Okay, what other questions? Sorry to be. Additionally, both my business foreign financial advisors can assist British business in other areas coming to Romania. Very nice. So can you give us a successful story example? Yes. Just a second. I can give you a successful story example. I'll try to see if I can find one of my farmers to come on the platform just a second. If I can manage to find him, then I can bring him on the platform. Just a second. I'll give the floor to Michnea. Michnea is a Romanian farmer that is exporting, every week several trucks to the UK. The trucks have, probably 20,000 euros, give or take. and he can give you his own view. Migna, you have the floor. Hello, Migna?
Hello, can you hear me?
Yes, we can.
Hi.
Migna, you have the floor. If you just give to the audience a summary of, a minute of your experience.
Yes. I hope you can hear me well because I'm in Greece at the moment and the signal is not so well here. But I followed everything that you explained us, and I can tell you out of my experience that everything went down really smooth. As you said in the beginning, the KYC and the apostiles, and this took a little bit more time, but with as once I explained to our British clients what we need them to do, and we managed to pass on these technical procedures. Everything goes on really smooth. So I think we have a few invoices now that we've done with Invoice Cash, and our feedback, it's really positive. Everything goes on. I think maximum next day we have the money in our account since we upload the invoice in the platform. Everybody's happy. We are happy. Our British clients are happy, and it helps us because all the procedure is much faster than going to with a traditional bank, and it's much simpler at the end. So we can focus on making our exports and making what's important for us, and leaving aside a bit the financial stress of having all the pressure on our shoulders, because as you all know, when you work with a Western European country, everybody's looking for a payment term, 30, 60 days, 90 days, depending on how you negotiate the contract. So this helps us quite a lot. More
Okay.
than this, yeah.
Migna, thank you very much. You can basically,
Yeah, pleasure.
unless there are specific questions for him, but Migna gave you Migna has 3 or 4 exporters clients in the UK, and we have helped him in increasing his sales, and as he says, in alleviating his concerns on the creditworthiness of his clients, so he can focus on what he knows best, which is to market and sell his product to the UK customer base. Mina, thank you very much. Thank you, and we'll go back to our usual work. How do we promote our services? We're trying to. It's not easy to promote it, and we organize all sorts of events. We are also present in the financial press, and we will start doing digital marketing. We have a little sales force. We are trying to promote it and make it available. And, we think that our clients, like Migna, are the best sort of, agents to market our efforts because they are much more credible than we are. What are the risks covered by factoring? Fundamentally, the risk that is covered by our services is the risk of not being paid. Usually, as a company, you can protect yourself when you are having a commercial contract in 3 ways: by asking your client to provide a letter of credit or a bank guarantee or a bank draft or anything that looks like a guarantee. The second one is to go and buy a credit risk insurance from an insurer. And the third one is to go to a specialized factoring company like us to sell your invoice. Because we are doing it non-recourse, basically, it's non-recourse to Migna, so he sells the invoice in good faith. And if for whatever reason, the British client or the Austrian client or the Romanian client doesn't pay, is not something that he is concerned of, because it's our risk, it's not his risk. So from that perspective, we cover this type of non-payment risk. And that's basically the main purpose of a factoring transaction. So apart from the non-payment risk, I don't see what other risk we can cover, but most of the other risks that are traditional are included in the commercial contract, and they will be covered. So when Migna transport his goods to the UK, there is a transportation company, and usually the merchandise is insured even against, an accident or theft or unexpected circumstances or any other sort of traditional risks when transporting goods between two locations. The quality and the quality is something that it's covered within the commercial contract. So what we actually cover is the risk of not getting paid by your counterpart. If there are other questions, we will be delighted to take the floor. I'm not sure if I answered all of them, but I think I've answered all of them. So
No, you did, and I wanted to thank you, Bogdan, and your team at Invoice Cash for the very interactive session today, and for our audience as well. And I only had one question for you regarding factoring in terms of sector. What would you say it will be, let's say, top 3 sectors that are mostly using factoring?
So let me just to give you the factoring in Romania is a business of around 5.5 billion euros. 80% of this business is done by the 4 top banks. Within the 4 top banks, so you're talking about the usual suspects, Intesa, Unicredit, Raiffeisen, Erste Bank, BRD. Probably 80% of this 80% is done by the multinational clients of these respective banks coming from their country of origin. So the French with the French, the Austrian with the Austrians, the Italian with the Italians, whereby they are doing factoring transactions for very large customers. Our niche is basically small to medium-sized companies that are struggling to get funding and to look at import, export, and domestic opportunities. Where is our, I think you have traditional sectors are fast-moving consumer goods, agriculture, manufacturing and industry, manufacturing, logistics, are areas where basically if you are a truck driver, your expertise in assessing counterparty risk is probably limited. If you are providing manufacturing services or installation and engineering services, you would love to be paid today when you have to pay your wages rather than wait for 2 months or 3 months to be paid when certain milestones are confirmed. So I don't have a study to pinpoint which exactly where the market is, because if I take, say, the large players in the market, you will see that probably NL is a large client for factoring services, but this is because it is a large company. Renault is or Auchan or Carrefour are large users of factoring services, but this is because they are just very large companies with very large businesses. So for small operations, also small to medium-sized operations like ourselves, We're focused on finding certain areas where we can be competitive and where we can provide added value services. There is no Romanian bank willing to provide MIGNA with UK risk, regardless of size. Okay, so in that respect, the service that we offer is quite unique, but the purpose is to help small to medium companies sell their services either from the UK to Romania or from Romania to UK, or from the Netherlands to Romania, or the Romania to Netherlands. Is not UK specific. We can look at the whole European Union as a very attractive market.
Right.
So I don't have an answer other than saying.
Yes, understood. We will settle with the answer you already provided. So thank you again. And I will also want to thank the audience for staying with us for this 1 hour webinar. The webinar will also be recorded and we'll be sharing it via our website and our YouTube channel as well. And we do wish to welcome you to our upcoming event on the 23rd of June. It's a face-to-face event together with AmCham Romania and the Canadian Business Association.
Thank you very much. It
Thank
was a pleasure talking to you. Thank you.
Likewise. Bye.
Thank
Bye.
you.
Thank you.